For years, Miami stood as a shining symbol of Florida's unstoppable housing boom, a paradise where prices could only go up. Investors flooded in from New York, California, and even overseas, eager to grab a piece of Miami's sunlit skyline. But that illusion is now shattering. The same market that skyrocketed during the pandemic is unraveling before everyone's eyes. Homes that were selling above asking price a year ago are now being relisted at massive discounts. Apartments sit empty for months. Even high-rise developers are quietly panicking as interest rates and insurance premiums destroy affordability across the board. What makes Miami's collapse different this time is the speed. The market isn't cooling, it's crashing. Realtors describe neighborhoods once buzzing with bidding wars now eerily silent. Sellers slash prices weekly, desperate for offers that never come. Wealthy investors who once saw Miami as a safe bet are rushing to unload their properties before the slide gets worse. And as these investors retreat, regular Floridians are left behind, struggling under record mortgage rates and unbearable insurance costs that make homeownership nearly impossible. The governor of Florida has finally spoken out, calling the crisis a failure of federal economic policy, pointing fingers at Washington for driving inflation and hiking interest rates. But critics say this meltdown was inevitable. For years, Florida's government encouraged unchecked development, luxury construction, and speculative buying, while ignoring the growing housing inequality and the warning signs of a bubble. Now, Miami's glittering skyline hides a darker truth, a city drowning in oversupply and fear. Families who bought at the peak now face financial ruin. Many are underwater on their mortgages, watching their dream homes lose tens of thousands in value each month. Renters aren't spared either. Even as prices drop, wages haven't caught up, and property taxes remain sky high. Insurance premiums, particularly after recent hurricanes, have doubled or even tripled, forcing many to abandon their homes altogether. This isn't just a Miami problem. It's a Florida problem. Tampa, Orlando, and Fort Myers are next in line. The dominoes are falling, and the panic is spreading. Experts warn that this could become the largest housing downturn since 2008. The question now is whether Florida can recover, or whether this once booming state is entering its greatest real estate collapse in modern history. Florida's booming real estate market was painted as unstoppable, a golden era of endless growth where prices only went one way, up. Politicians, developers, and economists all dismissed the idea of a housing bubble, insisting the demand was real and sustainable. But behind the glossy marketing and political speeches, cracks were already forming. Now, those cracks have split wide open, and the bubble they swore didn't exist has finally burst. Throughout the 2020s, Florida saw a wave of migration that sent home prices soaring. People fled high-tax states for cheaper living under the Florida sun, and investors followed, buying up entire neighborhoods. It felt like a gold rush, bidding wars, cash offers, and homes selling sight unseen. The media called it a new Florida dream. But that dream was built on cheap credit, record low interest rates, and speculative buying. When those pillars started to crumble, the illusion went with them. By 2025, the story changed. Interest rates had more than doubled, property insurance costs hit all-time highs, and thousands of homeowners found themselves priced out of their own communities. Realtors who once sold homes within hours now struggled to find a single buyer. Entire developments slowed construction or went bankrupt as financing dried up. Even big investment firms that once flooded the market, like Blackstone and Invitation Homes, quietly started selling off properties. The people who warned about a bubble years ago were suddenly proven right. Yet, despite all this, state officials continue to deny the obvious. Press conferences focused on temporary slowdowns or market adjustments. But behind closed doors, they knew the truth. Florida's housing market was dangerously overleveraged. The average Floridian couldn't afford the average Florida home anymore. Meanwhile, middle-class families began fleeing the state they once flocked to, searching for affordable housing elsewhere. Now, experts are calling this a textbook collapse. Overinflated prices, rising debt, and panic selling. The very same cycle that led to the 2008 crash is repeating. Only this time, the numbers are even bigger. And while some blame federal interest rate hikes, others point fingers at the state's reckless overdevelopment and lack of affordability controls. Florida's real estate bubble wasn't just predictable, It was preventable. But when profits come first and warnings go ignored, bubbles don't just form, they explode. And this one, they can't deny any longer. When a housing market collapses, everyone scrambles to find someone to blame. In Florida, the finger-pointing is reaching a fever pitch. On one side, state leaders accuse the federal government of reckless monetary policy, high interest rates, inflation, and economic mismanagement. On the other, federal officials say Florida's housing crisis is a result of local greed, deregulation, and poor planning. The truth? Both sides played a part in creating the perfect storm, now wrecking the Sunshine State. For years, Florida politicians proudly advertised their state as a haven for developers. Low taxes, minimal restrictions, and quick permits. The message was simple: build, build, build. That worked beautifully for investors and construction giants who profited from the boom. But as luxury condos filled Miami's skyline and suburban sprawl spread across Orlando and Tampa, affordable housing fell off the radar. Local leaders ignored the warning signs. Instead of balancing growth with affordability, they fed the frenzy, allowing speculation to spiral out of control. Then came the pandemic, and with it, trillions of dollars in stimulus spending and historically low interest rates from the Federal Reserve. For a few years, cheap borrowing created the illusion of endless prosperity. But when inflation exploded, the Fed hit the brakes, hiking rates faster than anyone expected. Overnight, mortgage payments doubled, buyers vanished, and investors were trapped holding overpriced assets. What was once a roaring housing market turned into a panic-driven sell-off. Now, both local and federal leaders are scrambling to cover their mistakes. State officials blame Bidenomics and the Fed's aggressive rate hikes for destroying the market, while Washington fires back, saying Florida ignored years of overbuilding and underregulation. Caught in the middle are millions of Floridians, families losing homes, retirees watching property values crash, and renters squeezed by record prices. The tragedy here isn't just the collapse itself. It's that it was avoidable. The signs were obvious: runaway speculation, investor takeovers, and a lack of long-term planning. But political leaders at every level were too busy collecting short-term wins to prepare for the fallout. Now that the music stopped, both sides are scrambling for cover, and Floridians are left cleaning up the mess. Miami, once the crown jewel of Florida's housing boom, is now standing on shaky ground. For years, the city was a playground for developers, investors, and wealthy buyers from around the world. Condos were sold before they were even built, and neighborhoods once filled with modest homes turned into luxury zones overnight. But now, the music is stopping. As prices cool and buyers vanish, Miami homeowners are left wondering, what happens next? The first thing to understand is that Miami's market isn't just slowing, it's shifting. During the boom, low interest rates and high demand from out-of-state and foreign buyers drove prices to record highs. Investors bought multiple properties, renting them out or flipping them for a quick profit. But with mortgage rates now above 7%, the same homes that once sparked bidding wars are sitting unsold for months. Sellers are slashing prices, and some are taking losses just to get out before the market dips further. Homeowners who bought at the peak are the most vulnerable. Many stretch their finances thin, believing prices would keep rising forever. Now, some face mortgage payments higher than what they can rent their homes for. In neighborhoods across Miami-Dade County, listings are piling up and foreclosure filings, once almost non-existent, are beginning to climb again. While we're not yet in a full-blown crash, the warning signs are flashing bright red. Meanwhile, property taxes and insurance costs are exploding. Homeowners in coastal areas are being hit hardest, with some insurance companies refusing coverage altogether due to rising flood risks. That's pushing monthly costs even higher, making it nearly impossible for average families to stay afloat. Many longtime residents are being forced to sell, leaving behind communities they've called home for decades. The question now is, how low will prices go? Analysts predict that if interest rates remain high through next year, Miami could see price drops of 15% to 25% or more in luxury markets. Investors are already retreating. And without their money, the artificial demand propping up the market disappears. For Miami homeowners, the best move now is caution. Those who can afford to hold on should prepare for a long correction. Those who can't may need to sell before conditions worsen. Either way, the era of easy money and skyrocketing home values in Miami is over. The city that once symbolized endless growth is about to face a painful reality check.